What's up, everyone? It's Caddy with Money Vesting. Welcome on board. Sorry for that. I have no idea what's going on. I mean, first of all, I tried to live stream first and something wrong happened with YouTube and my entire computer pretty much crashed, and then I restarted it. And then the second time I went live and the YouTube thing just didn't load up. It wasn't even showing up as live, even though like my other OBS studio was live. It's just like, I don't know. So I restarted everything, had to start all over again. So I do apologize for being a little late. But again, thank you so much for joining in. I really appreciate it. Make sure that you drop a like, subscribe. We are once again going forward with a very important week for the markets and the economy. Not only do we have a lot of earnings scheduled, but we also have the Fed meeting and of course unemployment numbers coming out. So make sure that you give me a thumbs up in the live chat if everything is working well. Audio, video, just want to make sure that we are all set now. So Milan says we had a bet going on if it was haircut versus you putting on your makeup or a power outage. No, it was definitely YouTube acting a little weird earlier with even though I was live on my OBS studio, the live stream was not going through on YouTube. And the first time, everything pretty much just went down for me. So I would say it was a little bit of power outage for me. But anyway, QQQ's here. Very strong rally pre-market. They have pushed higher a little bit over 1% on the back of earnings from ExxonMobil, UPS, GM. Some of these companies reporting some very good numbers. Pfizer, Caterpillar, McDonald, Spotify. So we've got a lot to go over. And of course, later this day, like later today, we've got Advanced Micro Devices, so AMD is going to be reporting earnings. I'll break them down after they've reported. And then of course, Snapchat and Amgen also reporting their numbers. So lots of interesting companies reporting here. When it comes to some of the upgrades and downgrades on the day, Apple gets reiterated as an equal weight. We got Lucid reiterated as an underweight by Morgan Stanley. Atlantic Equities downgrades Bank of America. Deutsche Bank reiterates Disney as a buy. We got Dollar Tree downgraded to sell. Alphabet reiterated as a buy from B of A. Lam Research has a positive catalyst watch by Citi. And then we got a Nokia downgrade. We've got, Paramount got downgraded to underperform. Uber got reiterated as a buy. PayPal as reiterated as a buy as well. Ford reiterated as underweight by Wells Fargo. AMD reiterated as outperform. And then we've got SolarEdge and First Solar also reiterated as a buy by Goldman Sachs. Now, when it comes to Advanced Micro Devices, we are going into this earnings expectations are quite decent. They are okay. They're not like super high versus super low. So if you take a look at Advanced Micro Devices pre-market, we are down close to 0.5%, 30 basis points. And the expectations are for earnings at just over 67 cents per share and $5.5 billion worth of revenue. Now, when it comes to the analyst, the highest price target on the street is $200, and the lowest price target is $60, and the average price target of $91, with 11 strong buy ratings, 20 buy ratings, 10 hold ratings, and no underperform or sell ratings on Advanced Micro Devices. So definitely, it is going to kind of follow Intel's footsteps, not entirely, but I do think the PC market is definitely slowing down. So that is a little bit of a potential headwind that AMD could face. And then the data center, I think that's going to be very important and how AMD kind of deals with that and what that guidance is going to look like for 2023. So all of that, very important. But let's just quickly break down with the 4 minutes that we have some of the companies that were reporting earlier today in pre-market. So UPS with a very strong beat on earnings, a slight miss on revenue. Shares are up over 1.6%. And this was for the fourth quarter 2022. And they also declared a quarterly dividend of $1.62 per share, an increase of 6.6%. And 2023 dividend payments to be around $5.4 billion and repurchases of around $3 billion for the company as well. So very good numbers and getting a little bit of a dividend boost. And they said for the full year 2023 revenues of $97 to $99.4 billion. Analysts were looking at just a little bit under $100 billion. So just slightly shy of the expectations, but we didn't get a number for the earnings for 2023. But all in all, just a lot of consolidation for UPS. So I would say the guidance was okay. It wasn't the best, but it was decent. GM coming out with a double beat and a very strong guidance beat, and the stock's up over 7%. So EPS coming in at $2.12 Revenue coming in at $43 billion. That's a very strong beat across the board. And they're also guiding really, really well for 2023. So if we come down here, let's see, there we go. And for the full year 2023, adjusted earnings of $6 to $7 per share. Analysts were expecting $5.74. So that's a huge beat and very strong numbers. And even if you take their mid guidance of $6.50 and the stock's trading at $38 right now, 30 divided by 650, we're looking at a 5.8. Is that right? That is crazy. Under 6 times forward earnings. No way. That is like super, super cheap for the company. Yeah, it is trading at 5 to 6 times earnings. That's crazy. That's absolutely wild how cheap this stock is. Perfect. Yes, thank you so much for joining, everybody. And Christopher Waller, Fed official, said he would do 25 basis point hike tomorrow and no hikes in May. Maybe the market is right. So again, we do have a meeting in March also. So I'm not sure if he mentioned anything about the March meeting, but I think 25 basis points is very much likely for tomorrow. However, I do think the Federal Reserve and specifically Jerome Powell is going to be hawkish. I do think that there is going to be a tone of hawkishness tomorrow, and that's really what's going to dictate market sentiment, market direction. And like I said, I wouldn't be surprised if if Jerome Powell tries to take the market down a few notch, just considering how much of a rally we've seen. And we've made those comparisons, we've drawn those comparisons. How tomorrow's meeting from the Fed is something very similar to what we have seen with Jackson Hole. And, markets were rallying up till Jackson Hole. And then, of course, Jerome Powell came out and said what he said, a very, very hawkish tone, very aggressive. And the markets pretty much tanked in October to a new low. So the setup is very similar. But of course, it's going to be all hands on deck when it comes to Jerome Powell. Apple, Google, Amazon tomorrow. Which one do you think will come out as a winner? So Alex, I believe they are on for Thursday and not tomorrow. Tomorrow is Meta and Align Technologies, but Amazon, Alphabet, and Apple are going to be the day after, right? Thursday. So the current plan right now is I will do AMD's analysis after the earnings come out today. So I will do a review and I will update my fair value after AMD's numbers come out. And then tomorrow, before the numbers come out for Meta, I will do a video on them, and I will do a pre-earnings video and a post-earnings video. And then I'll also do videos on Amazon, Apple, and Alphabet, pre-earnings and post-earnings. And then, of course, we'll kind of pick up some of the other stocks here along the way. I'll see if I can do a video on UPS, ExxonMobil, maybe even Caterpillar and McDonald's. And then I'll also do probably videos on Qualcomm and Starbucks. And then we'll see if we have time to cover Altria and Waste Management, some of the other companies as well. So that is going to be the plan at the moment. So yes, not tomorrow, Thursday. The game of chicken will continue, yes, between the Federal Reserve and the market. So that's what we're here to see. But here we go. The markets are open. It's like we definitely did start the live stream a little bit late, so we had a lot to talk about. But anyway, Tesla's down about 1.7, 1.8%. So I need the stock a little bit lower. That'd be nice if you can be down over 2 to 3% here for Tesla today, so I can close out on my covered call and definitely take the 6 and profits and probably even sell again, because that covered call was crazy, right? We literally just sold it yesterday, and we're already up a little bit over 63, 64%. So I'm actually thinking about closing that one out for good, considering how much it's already pushed up in just a matter of one day here. Yeah, Tesla's starting to push higher a little bit, so I am thinking about it. So, all right, let me just update everybody. Man, it's, in our Discord, there's a few people that have their names starting with every, EVERY. So every time I try to tag everyone, I end up tagging just those individuals and not everyone. But anyway, so All right, so that is done. I want to also take a look at how's AMD doing pre-earnings here. Advanced Micro Devices. So getting a bit of a validation here at that support at $72 right now. And QQQs are starting to push higher a little bit. Very nice validation from that middle VWAP and the 9 EMA. So we are starting to push higher a little bit. But there is going to be some resistance levels to watch intraday at least. So right here at 292 60s is going to be a very strong resistance for the Qs, and we'll see if you actually do continue to break to the upside or if you rotate back down. All right, let's see. Upstart is pushing higher. Something about mega cap reports bad earnings. Tesla going to 140 or below. That would be good. I mean, if Tesla ends up going lower, I'm actually thinking about maybe selling another few covered calls on Tesla. But I'll allow for the stock price to kind of gain a little bit more momentum. But, considering the RSI and the MACD, we are certainly, we talked about how overbought, overextended we are. So it is not unusual. It's not a surprise for the markets to start to see a bit of a pullback, considering how much of a rally we've seen from the markets. Christian says, why are we green? Nothing has changed. So again, I don't necessarily call this green. Sure, that we're just slightly above water all on the day, but it's not like, green. I mean, Apple is flat for the most part. Tesla's, up 65 basis points. We got Google here flat, not really moving much. We got Microsoft flat. So most of the stocks right now, except for Meta, Nvidia, Amazon's doing well. Some of those are doing well, but for the most part, we're just like flat here. Of course, if we start to rally past 292, 293, then yes, I mean, it would be a very strong green day, 1%, 1.5%, 2% day for the market. But for now, we're just kind of slowly and steadily kind of grinding upside. And that's good because, Tesla's pushing higher, 1.3%. Glad I was able to close out that call. Markets are waiting on Powell, that's for sure. Tomorrow is the big day, February 1st, Wednesday, when Jerome Powell is going to be talking. And that's what's really going to be driving the markets moving forward. So let's take a look at McDonald's as well. Let's see how McDonald's did. Slightly down 1.6%, but we got a beat on earnings, beat on revenue. Let's see. Let's take a look at their numbers. Okay, so revenue did decline a little bit. Earnings per share was $2.59, up from $2.23. Analysts were expecting $2.46. We got a beat on earnings. Revenue came in at $5.93 billion, down from $6 billion. Analysts were expecting $5.75 billion. And the fast food chain's Q4 comparable sales were up 12.6%. Analysts polled by Capital IQ were expecting 8.6%. And the U.S. comparable sales up 10.3%. Okay, no guidance on this for McDonald's. But let's see. So, okay. Can't find a guidance here for McDonald's, but if I do, I'll definitely update you guys. But for now, we are starting to see a bit of a pullback here. McDonald's is one of those companies similar to Coca-Cola, Pepsi, like some of these companies like in the defensive and more of the retail sector, like they are still trading at incredibly high valuations. Like just think about this. McDonald's trading at 34 times earnings and over 8.6 times sales. Come on. Like you gotta be kidding me. What does McDonald's have that Apple and Tesla and Meta don't have? Like it's crazy. 8 times sales, 9 times sales for McDonald's, 34 times earnings. And it's just, man, I don't even have anything to say. Like it's crazy. Wesley says quarter pounders. Come on. Is anybody even eating that? Is anybody even eating? How many times like are you guys even going to McDonald's? Like in what, like once a year? McDonald's is legend, untouchable. People love them nuggets. My family 3 to 4 times a week. Really? Wow. Milan says me weekly. What? I don't know. People love the McDonald's so much. That's crazy. There's this really interesting video about how McDonald's, and this is actually pretty The rabbit hole for this goes even deeper, like how McDonald's ice cream machines never work. There's a video on this, and it's actually pretty crazy if you kind of dig in deep. And the company that makes it sends these people to fix those machines at an insane hourly rate. And if you've ever been to McDonald's, you may have noticed it yourself, but their ice cream machines almost never work. It's pretty crazy. But anyway, QQQ is getting a bit of a validation there at the middle VWAP in the 9 EMA, so still up 35 basis points, but more or less we're flat. So again, Apple's flat here, Google's flat, Tesla's slightly higher, Microsoft is flat. So we're not seeing a ton of momentum, but instead more or less sideways direction from the market, and which is really waiting for Jerome Powell and the Federal Reserve tomorrow. That's really what it's going to come down to. Spotify's up 8% on their earnings right now. So they reported pre-market, I'm pretty sure. TradingView doesn't have that right now, but let's take a look. Okay. So reporting wider Q4 loss amid higher revenue. So revenue was higher, but EPS came in a lot lower than same time last year. And reported a Q4 loss of €1.40 or $1.52 per share versus 21 euro loss same time last year. Analysts were expecting a loss of 128, so slightly wider than expected. Revenue came in at 3.17 billion euros, and that's up from 2.69. Analysts were expecting 3.19. So miss on revenue, miss on EPS, and the company says it expects $3.1 billion in 3.1 billion euros, and analysts were expecting 3.05. So it's maybe the guidance that's pushing the stock higher a little bit. But yeah, Spotify also, I mean, it's just really, really overextended right now. Just the amount of momentum this stock has seen is crazy. There is a really interesting Netflix series on Spotify called The Playlist. I haven't seen it. If anybody's seen it, let me know, because I'm definitely interested in kind of watching it. I've heard good reviews about it, but haven't watched it yet. Anyway, Dewey says, I thought it was breakfast menu until 10:30. Okay, McDonald's says very fast compared to other fast food restaurants and easy to order through the app. But still, I mean, it's like 35 times earnings is still crazy. It's still pretty wild if you ask me. Like, 9 times sales, like, most high tech growth companies don't even trade at 8 to 9 times sales. Of course, after the sell-off that we've seen. Oscar says, eat more lettuce. Add some nice spinach and kale to that too, Oscar, and you've got a nice salad if you also include a lot of other things. Yeah. Anyway, so it's a nice series. Okay, that's good to know. But okay, we're starting to see a little bit of momentum to the downside for the Qs, and we are seeing Tesla break down a little bit below its middle VWAP in the 9 EMA, and so is Apple. Google is also coming down, and so is Microsoft. So a lot of back and forth, a lot of choppiness from the market. And the next support really is going to be down to 289.28 for the Qs. Volatility up over 1.6%, so back over 20. And we've got the 10-year yields sitting at just over 3.5%. Right now, the consensus for tomorrow, CME Fed Watch tool. So right now, the consensus is... Okay, well, this is new. Oh, there we go. Yep, so about 99.8% for a 25 basis point hike. So that's what the consensus is for tomorrow. And for March, another 25 basis points. In other words, another 50 to get us up to 5%. And we already know that in their SEP, the Federal Reserve is guided for 5.1%. So it should be interesting as to what the Federal Reserve ends up doing and what they end up saying. I think it's not so much going to be what they do, but instead what they actually say, what's really going to be driving the market. And if we come over to comparison tab here, what you'll notice is if we come over to the March 22nd, so, okay, current 99.8%, but Obviously, 1 month ago, the expectations for 25 basis points were a lot lower. They've only gone up as we've gotten closer to this meeting. And then when it comes to the March meeting, another 25 basis points has only increased from 60% to now over 82% for March. So weekly contracts on the QQQs, I have not. Usually, most of the times, I do like monthly contracts. That's what I'm most comfortable with. But no, I haven't really done weekly contracts yet. Do I think that Jerome Powell will do the speech tomorrow with such a tone and wording to tank the markets? I don't think he's going to be focused too much on the market. I don't think he's going to even talk about the stock market. I think his message is going to be very much related to what happened back in the 1970s and 1980s. I think there's two words that I'm absolutely certain that he's going to use. Can anybody guess what those two words are? Actually, three words. Those are three words that they don't want to do. Does anybody know what those three words are that they don't want to do? I mentioned this in my other Fed video. If you guys paid attention, we talked about this. And I'm almost certain that he's going to talk about this and draw that comparison between the 1970s and what Paul Volcker did to what they're doing now. And they don't want to do that this time around. Yep, so Matthew got it. Premature loosening. Yep, you all got it pretty much. Loosening prematurely, premature easing. Yep, you guys are absolutely correct. That is correct. Loosening policy prematurely. And, we don't know if this is premature or not. It might be, but we don't know. You will only know in hindsight 2020. So whether it is already too late or if it's premature, only time will tell. Even if Cathie Wood and Jeremy Siegel and all the other economists are saying that the Federal Reserve is over-tightening and they're overdoing it, well, we're not really seeing inflation turn into deflation yet, right? So we're only going to find out in hindsight. So I think that is one thing that Jerome Powell I'm almost certain that he's going to mention, that they don't want to make that mistake of loosening policy prematurely, because what happens then is that inflation, starts to climb back up higher, right? And that's the last thing they want, right? They want to put inflation back into its bottle, and they want to make sure that it doesn't become a more persistent problem. And in order for them to do that, they want to make sure that they keep the foot on the gas and keep doing what they need to do in order to bring inflation back down. Now, with that being said, would they acknowledge some type of over-tightening, some type of economic recession scenarios? They might, but unfortunately, even the economic indicators are against us right now in a way that they're so strong, right? GDP growth was so strong in Q4, 2.9% is not a joke. It's a very strong number. The quarter before that, over 3%. Unemployment, right? 3.7, 3.5%, like really, really low numbers. And of course, we got unemployment on Friday this week, so we'll get some more insight. But all those economic indicators are so against us right now, because that gives the Federal Reserve more flexibility, more runway in terms of raising rates. And they've already mentioned, look, we're happy to raise interest rates to a level so that there is economic pain, and we want unemployment to be higher. Like they've mentioned that in their report, that they'd much rather have unemployment up to over 4.1%, so that they know that interest rates are actually affecting the economy, and that can pretty much bring down inflation overall. So that's that is what my expectations are from Jerome Powell. Now, is the market going to like that? Is the market's not going to like that? Very difficult to predict. I mentioned this to one of our members, that even if we today, like right now, even if all of us knew exactly what Jerome Powell is going to do and say tomorrow, even then we wouldn't be able to predict what the markets are going to do, because it can be all over the place. It can be chaotic, and markets can take one piece or other and trade off of just that news. So It's much better for us to wait, see what he does, see what he says, and then trade off of that price action and how the markets trade. Right now, we're just getting a lot of head fakes. The last couple days, I've been caught up in some of the head fakes where you're seeing these longer wicks, right? I mean, the markets are like moving like that in a snap. They're just going down and they're getting bought up. They're pushing higher and then they're getting sold off. So we're just getting a lot of head fakes with some really, really weird candles, both on the upside and the downside. So definitely be very careful in this environment. So Nima says, all these you saying means a soft landing. Stop being a bear because you missed the bottom. So, you can look at it however you want. I don't regret missing out the bottom or anything because I'm dollar cost averaging in smaller quantities and I'm happy to keep buying. And I'm not trying to time the bottom anyway. I'm not trying to time the top or the bottom. But, the reality is the earnings and whether we see a recession or not. If you don't see a recession, hey, that's great, right? We see the markets go back up and earnings are strong. But if there is a recession, there's no denying a fact that earnings are going to get affected. And what's going to be that number? And right now, still, we'd have such a wide range of expectations for earnings. Every time I ask somebody, like, what is your expectation for earnings? I get like completely different numbers based out of no analysis whatsoever. Like, so if I asked you, like, what is going to be the earnings per share for 2023, I'm sure we're going to get a lot of different numbers, right? A lot of different numbers all over the place from like $180 all the way up to $250, $270. So yeah, she said you missed the bottom. So anyway, QQQ is here pushing up over 0.5%. So lots of move to the upside. And we got Google and Apple here really driving that move higher. Tesla still at 1.3%. So that's really good. By the way, I locked in that covered call for a nice 64% profit. So that's done. So $212 EPS is what Kevin says. So $212, I would say that's a fair estimate. That's a bit of a contraction from 2022. Again, 2022 numbers are going to be finalized in about a couple of weeks. But once we get that 2022 numbers, we can guide for 2023 from the guidance that we will have. And that's really what's going to put down a multiple on the S&P 500 on a forward basis. So I'm going to end the poll there. All right, let's see what's actually still leading the charge, leading the way in 2023 so far. So this is one of the charts here. Bitcoin is still leading the way. We've got Ethereum still up over 30%. VIX is down, 10-year yields, utilities, dollar index, healthcare, and staples still selling off, with technology and discretionary still leading the way, with the NASDAQ up over 10.5% so far on the year. Very, very strong start to the year. So Emma, why do you locked in covered call? You think this is going back up now? So great question. But there's also a lot of time value of money that you have to account for. Like if I sold a call that is 30 days out, right? That's what I did. Yesterday, I sold a call that was actually a couple of calls that was 30 days out, 32 days out, expiring in March, like March 3rd. And that call was already up 64% in just less than 24 hours. I don't need to hold another 31 days to eke out another 30%, right? 35%. Instead, I lock in profit because majority of that profit was made. Like my target's at 64 to 70%, right? Anything over that, if there's a lot of time value left, then it's just not worth holding for me. There's a lot of opportunity costs with that. I can turn around if Tesla's pushing up right now, as it is. It's up another 2%. I can go ahead and sell even more covered calls once again, and collect more premiums. It's just like, would you be interested in holding on, for like 30 days for another 20% or 30%? No, you move on, you lock in profits, and you sell. Repeat the process, right? You sell even more. Cool says that means our Tesla shares have been sold to the buyer. No, that's also not true. I basically bought back the call I sold for a profit. So my Tesla shares are still with me because that call is still further out of the money. So it's very much out of the money because yesterday Tesla was down so much, and today it's still higher, which is good because I did sell it right at the open, but bought it back right at the open. Did not sell it, but bought it back. Yeah, here's your chance to see another covered call. That's what I'm trying to do right now. It's like, let's see what the premiums look like for Tesla at the moment because it is pushing higher quite a bit. So if they're good, like if they're anything close to what we had yesterday, then I'd be interested in maybe selling the same contract. So, okay, March 230 is giving us $1.71. Yeah, see, I mean, I bought it back at like 150. Right now it's trading for 171, so it's good. And then right now, let's see, 210s at 325, 215s, 277. Yeah, so prices dropped quite a bit for those calls, right? Nobody really wants those calls anymore. A couple days ago, they were selling for $4 per contract. And by the time I got to the execution, I got filled at 370. So pretty much 30 cents per contract. That's how volatile it was. It pretty much dropped very, very aggressively. February 24th, which is 24 days out, 230s, yeah, $1 per contract, 220s, 141. So, yeah, I mean, call premiums have come down for Tesla quite a bit in the last couple of days because of the sellout that we've seen. So again, a very, very nice downtrending channel on SQQQs, a very nice uptrending on the QQQs. So doing really well at the moment on an uptrend here. This is all on the back of Apple and Google so far, and Microsoft and Tesla. But yeah, Amazon's also killing it right now, 2.3%. Very nice move. So Datadog at 70s buy for me years. For me, as grows phenomenal and product is leading with AWS and Azure and many other tech plugins as well. So FNGU, I would be very careful. Finance Top G, it is definitely a levered ETF and specifically very concentrated levered ETF because it's more focused on FANG plus I think it's got Tesla and Nvidia in there as well. So definitely be careful with these. I mean, they're mostly meant for trading purposes, for hedging purposes, not from like a long-term investing purposes, right? So I would never personally even hold them long-term, but only trade on a daily basis or on a swing trading basis. But Datadog here, let's see, $73, $74 is where we are. The market cap, 23 billion. We're still nowhere near close to profitability, although we are very, very close right now. It has been trying to turn the corner, but the margins are decreasing over the last 3 quarters here for Datadog. So if they can turn the corner towards profitability, that would be very good. But again, 16 times earnings, you have to ask yourself if the company is really worth 16 times earnings right now. Even though that metric has come down a little bit from fourth quarter 21, geez, when it was trading at 60 times sales. Absolutely crazy. It's come down to about 15, 16 times and price to cash flow at 58. So definitely rich from my perspective here, Datadog. So in this quarter, why Netflix EPS and net income was so low? So it's because they have a pretty high operating expense in the fourth quarter. Their content slates kind of filled up. They mentioned it in their earnings report that seasonality-wise, this is our most expensive quarter. Q4 usually is because they do have a pretty substantial spend in the fourth quarter, which is why their earnings were really, really low. And that's also the reason why you see a lot of subscriber addition in the fourth quarter for Netflix versus any other quarter. So that explains the lower net income and earnings per share. Srinivas says, Meta, hope no surprises this quarter. Oh man, don't know what to tell you. We'll see tomorrow. I mean, Meta obviously for the last couple earnings calls has really just been hurting investors left and right. But so far, I mean, it's done really well from lows of $87. It's rallied 73%. Another resistance up to 154. So we'll see if tomorrow if it gets a breakout. But technically speaking, our RSI MACD is just really overextended, unfortunately, for Meta. So if it does get a breakout, if it gets up to like 180s, absolutely I'll be selling some covered calls to hedge on potential downside there. So I think that's something that I would probably do if these companies after earnings start rallying pretty aggressively. We'll start to look into some covered calls as a potential hedge on the downside, really. So 4,000 S&P right now, 225 would be 17.7. So, Caddy, I heard from many people that Jerome is looking at the markets and the price action that we see in recent weeks, and he's not happy because it is basically undoing what his intention was. So, I don't know what to tell you. I mean, I don't know who these people are, but how do they know what Jerome Powell was looking at? And I really doubt that he's going to be looking at. Sure, I mean, he pays attention. I'm not saying that he doesn't look at that at all. He's paying attention to what the markets are doing, absolutely. But that being said, I mean, I don't think he's going to mention it in his speech. I don't think he's going to be like, oh, the markets are pushing higher. I don't like that. And as a result, I'm going to keep raising rates until they settle down a bit, like, sure, he's paying attention to a lot of markets. Like, he's looking at the equity markets and the credit markets and the bonds, commodities markets, and all types of markets he's paying attention to. But I don't think he's going to single out just because the market's been rallying. That's a reason for him to tighten even more, I think. So Oleg says 2023 IPOs. So I'm waiting on TradingView. I'm waiting on Canva. I'm waiting on Discord. There's a lot of cool companies that are going to be coming out. But yes, TikTok, ByteDance, and Databricks. Databricks is good. That's definitely a good one. But yeah, there's going to be some IPOs, but IPOs markets also dried up quite a bit, right, this year. I mean, because of funding, because of just what's been going on, especially in 2022 and 2023, the private markets have really cooled off. Because of what's been going on with the bear market and liquidity. Yeah, Stripe's good. Stripe's also good. So trustworthy. I was shadow banned on this channel and I have a screenshot of what I said not showing up on your screen. That's weird. I don't know why that happened. Was it in the comments in one of the videos, or was it just like a... On this channel, do you mean like on YouTube? About the viral Twitter video? I have no idea what you're talking about. That was banned on this platform. Okay. Let's see. So MBLY. Mobileye doesn't seem like it had a lot of liquidity, to be honest, Kevin. I mean, we still did have like, a few million shares being traded, but most of the times it had like 600,000, 700,000. Few days there was like a really, really low liquidity, but it has done really well since its IPO. Like it's up over 40%. So Mobileye has done quite well. In fact, they did have earnings. Well, I think they reported when Intel reported January 26th. Yeah, the same day. But yeah, they've done really well. Up another 3% today. Sofi, let's take a quick look on Sofi here. So resistance up to 717. We do have a big gap. But Sofi would need to fail all the way down here. And a resistance up to 717 and support 512 for this company. Yep, so that's a good point. That's a wealth effect, what you're talking about. If the market keeps going higher, of course, the expectation for inflation also keeps going up because people have more money to spend, correct? And, that is one of the reasons why I do think Jerome Powell is going to be hawkish. But I don't think he's going to cite the market or anything. But he is certainly going to sound more aggressive, more hawkish in tomorrow's speech. But anyway, so thank you so much, everyone, for joining in. I really, really appreciate it. As always, make sure that you drop a like and subscribe to the channel. I'm going to jump over to our Discord and see if there's any questions, updates there, some alerts that I'll share. But thank you so much for joining. Again, tomorrow we've got Advanced Micro Devices later today. And tomorrow we've got Meta and Jerome Powell on schedule for the markets and the economy. So thank you so much. Happy investing, and I will see you all in the next live stream.